Welcome to another live stream, Legends. Well, guys, for the first time in a long time, I actually have some fairly mixed feelings about the market right now. There's been a couple minor changes in the charts, but all in all, we are still at macro resistance. So, I mean, we got to be careful with that. I know there's a lot of bullish, just bullish headlines, bullish everything going around, and we have been seeing a bit of a pump here the last couple of days, but we got to be careful of a few things. So, there's just a couple of things right now that I really don't want to ignore. So to start off, let's hop right into the 4-hour chart here, you guys. I did end up taking a little bit of a short earlier, nailed the top of this. My reasoning for that was, again, we were getting close to the 886 once again. And also on the 1 minute, there was a bit of a swing fail there. I'll get into that on the shorter time frames in a bit. But I do have a position there. I may actually shock you guys. I have a bit of a hedged long position as well. I'll go into that as well. But yeah, guys, as it stands right now, I mean, the fact of the matter is that we do still have this structure down here. I know there's a different Stuber fib I was actually looking at. I was looking at the one of the, I would consider this the micro trend just because it's the most recent lower low and therefore lower high of the trend. However, the fact is that since even if we end up invalidating that one, then we are just into a slightly bigger range, right? There's always smaller ranges inside bigger ranges. And this one right here, I mean, either way, we have set some lower lows. We did not actually break this lower high, basically a double top so far. But even that, you guys, I mean, I was talking about swing fail earlier, right? Something to watch for on the 4-hour would be if we get above these highs back here. I mean, you'll see FOMO go crazy, and we could end up getting another sort of a swing fail where we end up retesting that and as resistance. And at that point, the market could go for quite a tumble and really throw everybody off. And that's kind of why, guys, I mean, all of 2025, basically, I've been talking about this potential liquidity grab zone up here. And the thing is, nothing has changed from that. You know, it's still there. It's still very possible that we end up getting that where we just end up getting some sort of a swing fail. Like I said, for me to actually get bullish on a macro scale again, there's a couple things that could happen. One would be invalidating this, actually a slightly bigger one because, well, I'll show you on the weekly in a sec. But again, there's just a slightly bigger range at play as well, actually quite a bit larger. But basically, I want to see the price get above 115K. And at that point, I'd be interested in longing some pullbacks unless we instantly lose a higher low on the trend at that point. But that being said, that would just be an invalidation of the bearish Stuber fib, basically. We'd actually be breaking above the 115, and in that case, the pattern is no longer valid. And that's why I've been saying for such a long time that that's really kind of the line in the sand for me. That doesn't mean that there's not a large move up to that level, right? I mean, a pump up to there at this point, even from where we are right now, I mean, that would be a nice 4 or 5% move to the upside yet. So there is potential for upside as well. And obviously, if we break through that, then so be it. Another thing that, like I said, what I would love to see is the RSI get back above 70. I have this downtrend line here, which was the divergence, basically going from overextended down to the 70 level. We are actually testing that resistance line right now once again on the weekly RSI. I would personally not only like to see this line break, but I would like to see the RSI back above 70 because in an uptrend that, or even as a divergence, that would be showing that we have a lot of strength coming in as we're trading at resistance, or if we're breaking higher, whatever. But if the RSI gets back above 70, I'll feel a lot better because that would show that there is a lot of strength in the market. The thing is, even if we break this divergence line at this point, much like how I was just talking with the structure, how there's slightly bigger ranges, much like this, there's still that potential for the exact same divergence, basically, actually even slightly cleaner off that 70 line if the RSI would go slightly higher yet. So I do want to watch out for that. Like I said, if we either break this, so this would be more so the bigger swing fail level I was just talking about on the 4-hour. But if we pull from our actual, our highs back here, where we initially topped around these levels down to our bottom, the 115 would be around 114.8 thousand, so call it above 115,000, which works out nice because it's the 115 fib as well. Easy to remember there. But basically break that or have the RSI break out into overbought conditions. I know a lot of people would see that as overbought. I would see it as, hey, if we're trending up and we have those overbought conditions, relative strength index, that would be showing a shit ton of strength in the market at that point. What I don't like, and what I haven't liked for all of this year so far, is the fact that even as we keep coming up to the same resistance level that we couldn't break last time, we're coming back up to that level with significantly less strength than we had the first time that we couldn't break it. So that's kind of why I've been leaning so heavily bearish every time we come up to this macro resistance level, which we've been here now for a month or two. But I mean, same thing happened last market cycle, right? Doesn't have to play out the exact same, obviously, but we had that divergence on the RSI. We had that swing fail. Actually, if I go with the swing fail, that's actually a double top pocket that I have there. But the swing fail, notice we never did get above that 115 last cycle, right? We got up into that pocket, set slightly higher highs, and after about a couple of months, we ended up dumping to the downside very aggressively. The one thing leaning towards me saying that I don't think that'll happen again is just because it seems way too obvious to me that we would have the exact same market cycle top. But that being said, until those bearish theories get invalidated, I'm just going to be more so favoring the short side of things as we're trading at resistance. Just like even if we get down towards, let's say, and this is a big if, you guys, but if we get down to some of those bigger like weekly targets, if we do get a big rejection here, let's say we do go down towards 83,000 US dollars. A lot of people would have given up hope on the market at that point. And again, I'll just be looking at it as, well, yeah, but even if it's short-lived, there is technically support there. And at that point, I would rather start to be a buyer at support, just like right now, how I'm more so favoring being a seller at resistance, right? That being said, I do want to, one other thing I wanted to mention, I believe it was on the 4-hour, was the Trendmaster indicator. You guys, I got to give credit where credit is due. This is something that I look for on the Trendmaster quite often, is lower trending sell signals or higher trending buy signals. And back here, we did have a lower sell signal. And for me, if looking at this for invalidation, if we break above the pivot point from the lower sell signal, since we have actually broke that, which also happened to be the 786 there, around 109,000 US dollars, we did end up breaking that and invalidating that on the 4-hour. So I do want to give that a little bit of credit. Like I said at the very beginning of this stream, there were a couple of changes in the chart. That is mostly what I've been referring to, just because that's something that I like to use this indicator for. And it's not going to be perfect. It's not going to play out every time, just like any trade setup. But as far as a trending indicator, that's more so how I like using these buy and sell signals, is which way they're trending rather than each one individually. So that being said, if I jump over to the 1-minute chart, you will see that we have we now have a series of lower sell signals and lower buy signals. And so I actually ended up taking another little bit of a short. So I have 2 open right now. And my reasoning for that was that I saw this lower sell signal. Because at this point, it's either this trend is reversing and I can easily get some nice, a decent profit on the way down at this point, or my invalidation is very tight, right? Because at this point it was right here when I got my lower sell. Now that I got a lower sell, I can actually drop that even a little bit more, because that would be where we got our last pivot from our last sell signal. So as long as the price stays below 109.8 thousand US dollars, at this point, that trending indicator is still valid. So I'm still playing the downside here. Notice I do have this purple line down here. I actually ended up sharing both this long setup down here as well as the short setup up here. I shared them both in my Telegram this morning, but my reasoning for this one, and honestly, I'm not going to lie, this was a bit of a piss poor entry for me. I will fully admit, but I saw it a little bit late that we may have a bullish Stuber here, being we had our higher high. So I pulled a fib from here down here to our highs. And notice we filled that fib pocket absolutely perfectly there. Actually went, well, not quite perfectly, I guess. Never quite hit the 886, but absolutely beautiful Stuber fib play there. I noticed it a little bit late. I ended up taking a little bit of a hedge long anyways. I did hit my first take profit here, and at that point, I have my stop loss at break even on this one, just like I have my stop loss at break even on this one after hitting 2 of my targets on that one. Because even though it was a swing fail, I just pulled up my Stuber fib, right? Because that gives me my swing fail zone. And basically when I hit my first target, second target. So it was actually a very nice setup. I wonder, I never even checked what the risk reward was on that. What was my stop? I think it was 566 or so. So to the second target there, I mean, that's a 7.5 to 1 risk reward. So that's where swing fails. You guys, I mean, I talk about Stuber fibs quite often, but honestly, swing fails are, in my opinion, actually a little bit better because you can get your risk reward that much tighter. That being said, as I ladder into Stuber entries, I do get my entry pulled up quite a bit towards my invalidation. If it's a short, that is. If it's long, obviously, I'm pulling my average entry down as I ladder in. So it is better than just like, let's say, entering at the 786, because that actually wouldn't give you a very good risk reward for hitting your targets versus how far you would be to getting stopped out, right? If we would have taken it from the 786, you'd be looking at a 1.3 to 1. And actually, this wasn't even a swing fail yet. I was just looking at this as a fake out zone and kind of YOLOing into a bit of a position just based on nothing but a very tight stop loss. But that's where I started it. I actually had a second entry down here on the retest, but I closed that whole thing already. So this is the one I still have running. But yeah, so a swing fail, looking for that double top territory, anything like that, you can actually get a much better risk reward than something like a Stuber fib. They don't happen quite as often, and since you have a break in structure like that, it's possible that it's not going to work out in your favor. But again, that risk is so tight, the stop loss is so tight, that I actually really like playing those. But obviously I don't talk about them as much. It's not my personal strategy kind of a thing. But yeah, that's basically why I took that short. Like I said, this long, I could have got a better entry, but it is what it is. It was a nice hedge, and at this point it doesn't owe me anything. It's just an insurance long at this point. But like I said, we'll see how this new short goes here. The Trend Master, we'll kind of babysit this a little bit during this session here. I will catch up on the chat here, or let me go through, just make sure that nobody has any questions or anything like that. Yeah, the swing fail strategy, Adrian. Yeah, I've liked swing fails for a very long time. They are very, like, again, the risk reward on them is just huge. It's just that, you know, because that's what it is. When it comes to trading, you're never going to win every trade. It's about controlling your losses and keeping them small. And the thing is, with my Stuber strategy, for example, I'm comfortable laddering into a position. I understand that I'm laddering in heavier as I get towards my invalidation, so that I pull my entry up very aggressively. But a lot of people don't do that, I think, because the greed gets the best of them and they just want to be all in at the 786 kind of a thing. But really, that kind of risk reward isn't going to do you any favors. And that's where, you know, a swing fail is nice and easy, because you can just set an alert, right? Like, let's say if we end up breaking this downtrend, but I want to see what kind of a reaction we get at the highs up here, I could just set an alert and then check it once that alert goes, right? So the trading is, I guess, a lot more relaxed if you trade that way as well. Copyrighted. See, I started hearing a lot about swing fails when I started seeing Kieran talking about them quite a bit when he came here. And then I started noticing a whole bunch of people trading them, a whole bunch of the mentors in here. And I was like, oh, I guess I was just, you know, I was trading. I wasn't looking at them that way. Although, well, I shouldn't say that. I guess I called them fake outs. I just never traded them as aggressively as I do now, I guess. An Adrian sweep, yeah. Swing Point is one of the oldest TA. Yeah, exactly. And the thing is, they kind of work hand in hand, and understanding Stuber fibs actually can really help you with your take profit strategy with a swing fail as well. Because let's say, let's just say, for example, that this is obviously a lot of what ifs, but let's pretend at this point when we retested this low, we broke below, but then we reclaimed it right away. A lot of us would know that, hey, I want to long that because we reclaimed structure level. The thing is, a lot of people would want to hold on to that until the moon, whereas you have to understand that even in a case like that where it's reclaimed, technically you still do have that structure break, right? So you would then, at least be looking at taking some profits as you approach a bearish setup, right? Because a bearish setup would be a sell level, whether that means entering a position or downsizing an opposite direction, like taking profits, reducing risk, whatever, right? So understanding that that little bit of structure with a swing fail, I mean, it can go a long ways. Yeah, exactly. Swing, structure, fibs, great combo. So, like, even at this point, since I am looking at this new position as a scalp, because for one, it was taken on a 1 minute signal, right? But again, notice that was good. If we had played the first lower sell here, I mean, I actually played it right away just because it fired, whatever. It's a tight stop. I just fired at it here. But I mean, could have got in at the retest of that indicator as well. Brought the average entry up even a little bit further. But like I said, got a couple not so great entries, but they're playing out anyways. Now with something like this is where, since it's the 1 minute, since it's a scalp, I am actually going to set a lower high here, because obviously it's very micro analyzing. For those of you who aren't familiar with my micro analyzing, here we have a low, right? Because we got a little bounce here with the green candle, but we ended up breaking below it. So technically the highest point between the two here, although it's very micro analyzing, that is where the lower high on the micro trend is. So in a case like this, since I scalped such a low time frame like this, I'm actually setting a trigger order to close, I'll take profit on half my position if we end up breaking this. And then I'm not going to bump up the rest of my stop loss quite yet, but I will downsize my risk as well as pay myself a little bit if we end up breaking some microstructure like that. And I'll do that quite often, especially on lower time frames when, things can really reverse very, very quickly. I don't mind updating stops very quickly on at least part of the position, whether you look at it as downsizing risk or paying yourself, whatever. I'll probably do about 577. And you know what? Small profits or reducing your risk is always better than taking a bigger unnecessary loss. If I'm taking a trade on a 1 minute position, then I'm not going to ignore warning signals on the 1 minute, right? Remember to play what time frame you're actually playing. So in that case, I would end up reducing my risk a little bit. I could still end up taking a very small loss if we invalidate this downtrend. But yeah, basically looking at this as a very small loss for a potential shift in trend, right? The fact that we shifted from higher sell signals and higher buy signals to lower buy signals and lower sell signals says that this could be shift in trend to the downside. And the fact that we're trading at resistance on the 4-hour chart, I don't really want to ignore that. I feel good being positioned a little bit both ways at this point, not from the same level. I want to make that clear that it's not like I'm entering long and short at the same level. You know, my initial short versus my initial long down here, they're about $1,000 difference in price from the entry points, right? So if you're gonna try and enter both directions from the same level, there's a good chance you're gonna get stopped out on both your positions. Whereas at this point, I'm more looking at it as eventually I'm cutting one of these loose and letting the others run. That must have been close. I gotta check if that hit. Nope, still good. See, that's why I always like to leave a little wiggle room too, right? And by that I mean that was literally like $3. Whew. But it could still be hit, obviously. Again, it's very micro-analyzing. This is some micro-analyzing live on the 1 minute degenerate time frame. I know not everybody wants to trade the 1 minute, obviously. But the thing is, market structure is market structure. Like, you know, as I show these strategies with the indicators, when I show structure with how I pull my fibs, it's all, you know, I treat structure the same, whether it's the 4 hour, the 1 hour, the 15 minute, 5 minute, 1 minute, weekly, daily, whatever, right? Structure is structure. So even if you don't like trading the 1 minute like me, you can still hopefully take some valuable information from how I view structure and fibs and stuff like that, even if you're more so trading on a 4 hour. And you know, that's another thing, you guys. If I was a swing trader, which I am more of a scalper myself, but I would have such, like, this is the type of market structure that always looks bullish, because it always looks bullish as you get to resistance. But my thing is, like, so many people say they're swing traders, but they're longing into resistance. Like, to me, from a swing trading point of view, this is kind of where I'd be, you know, from the 786 and up is where I'd be looking to ladder into my entry, right? If I was a swing trader, this is basically, this is how I would be treating this for entries, bringing my average entry up somewhere up here, because that would be on the 4 hour, right? But I treat the 5 minute the same. Any Stuber fib setup I take on the 5 minute, that's basically what it comes down to. If this chart pattern was on the 5 minute, I would be shorting it. So it's not saying that we have to blast, or that we can't blast through, right? Because I lose trades too. But just as looking at this as basic market structure, I have a hard time not being bearish at resistance until, like I said, if it breaks or the RSI gives us some sort of early warning sign. That trend master, that is the first early warning sign for me, is that the fact we invalidated this downtrend on the 4 hour here, maybe there's something to that. It's a bit of mixed signals because we still have a lower setting buy signal. So with a lower buy signal, the next sell signal might carry some weight to it. But again, it's a first warning sign, and why I have to be open to anything, right? As traders, it's not always about being right. It's about having a backup plan. It's about being ready for whatever the market does. Because yeah, it's great to analyze and predict what's going to happen, but you know, pulling the trigger and having a strategy, and you know, that's actually the important part. And just being willing to, you know, if the price does this, this is how I'm going to react. If the price does this, this is how I'm going to react, because you don't know what it's going to do for sure. It's just, you got to be ready for when certain strategies show up, right? It's not like I knew, you know, when we ended up breaking this structure down here, I was always saying there was a possibility we come back up to macro resistance. It's not that I knew it was going to happen. It was just, I was just saying that if it happens, I'm going to be bearish up here again. Oh, that definitely caught that half of this short got stopped for a little bit of a profit, whatever. Basically paid my fees. We'll see what happens with the rest. I'm more excited about this short up here. But yeah, if we end up invalidating this and breaking above that 109.8 thousand, I'll probably start looking for pullbacks to add more long positions. And actually, another thing I wanted to mention to you guys is I did want to take a look at the Bitcoin dominance once again. What was I looking at it on the weekly the other day? Let me just turn off some indicators here. So basically the other day I was warning that, or maybe it was even earlier today, Bitcoin dominance is basically flirting with a 786 on the weekly time frame. All right, that dates back to 2020. So this is a very large range, and the fact that we're coming up to that 786 resistance, I wouldn't be too surprised to see the Bitcoin dominance end up getting rejected. On top of that, if I zoom into the 4 hour, we did end up breaking a little bit of support here, and as well the trend master has printed a sell signal. Now this is one of those times where it's obviously a higher trending sell signal, so maybe we just set a higher buy and then Bitcoin dominance climbs even further. But again, it's just starting to get towards some pretty serious resistance here. And if this ends up getting rejected, I mean, that's where the market would get exciting again for me. In my opinion, at least, I think that would be great. And I think that would give altcoins a big green light to start actually making some decent moves. Because God, some of them need it. A lot of them, honestly, not too bad. I've been finding that like the micro cap memers have actually been performing better than regular altcoins. Hype is obviously doing good, doing strong. I'm going to look at that next. But obviously that one's been performing well for, basically since its existence, since its initial little sell-off. But yeah, like I said, Bitcoin dominance ends up getting rejected here with this sell signal, and I think that's a nice positive outlook for altcoins for a little bit. Just catching up on the chat a little bit, guys. Also, Adrian, obviously I'm going to look at hype for you, buddy. Everyone else, if there is any altcoins specifically you want me to look at, let me know in the chat. And as well, if you want to throw in what time frame you're looking at, I'll likely just check them, a bunch of time frames just to get a general feel for it. But let me know what you kind of favor when you're trading. JB, most price action strategies overlap each other half the time. Yep. Yeah, exactly. That's where adding confluence comes in, right? It's easy to go chart blind if you start adding too many strategies together. But at the same time, yeah, it's good if things are lining up and agreeing with each other. That's always nice to see. When they start conflicting with one another, that's where it gets a little confusing, but it's all a copy of a copy of a copy. Exactly. Yeah, exactly. Trading is just like war. You got to be smart and prepared for anything so that you survive. Exactly. Because I don't care how many people want to say they know what's going to happen. They don't. Nobody knows for sure. All we can do is play our probabilities. That's where backtesting comes in. That's not where practicing reading tweets comes in. That's where actually backtesting charts comes in, because you know what? We have no idea what the headlines were saying when you go back and backtest charts, right? I highly doubt anybody who has ever backtested charts, because everyone this year, everybody seems to say, well, this is different because something's going to be tweeted, something's going to be in the headlines, whatever. Any time previously, if you've ever done backtesting, which you shouldn't be trading if you never have, you've never gone back and looked at the headlines at the time that the charts were doing whatever backtesting you were testing, right? Like, that's just not realistic. And that's why ignoring the news, you guys know, I hate following the news. I purposely avoid speeches. Now that I have control over my emotions and I know just to trade the charts, it's a lot easier for me to ignore that kind of stuff, and it's kind of fun again to read that sort of stuff. But at the end of the day, it's the price action. already gives us the early warnings, because you're never getting that fundamental news. You're never getting those headlines or tweets or anything. You're never getting them earlier than the average person, right? Whereas when you look at the charts, you are seeing what the big players and what the money flow and what the market makers, what all the big money, what they are doing is actually showing up in the charts. It's not, hey, what if this happens? It's already in the charts. And that's why trading charts is so important. It's actually evidence that's there. You're not playing a guessing game what might happen. Plumbus saying that 68.4 to 70 to 70% Bitcoin dominance. Where would that put? Oh, okay. So you're thinking closer to the 886. And yeah, honestly, actually, that's a good point. If Bitcoin ends up rallying and smashing through its weekly resistance or whatever, if it ends up doing well and we see Bitcoin dominance climbing, I think that would be a very good sign for the market, because you would see that it's actually healthy, focus is on Bitcoin and it's being pumped, it checks out there mathematically. Whereas, if Bitcoin dominance is pumping, but the price is dropping, that's where people might be leaving those higher risk assets. And it's maybe a sign of weakness in the markets. But yeah, if Bitcoin smashes through resistance and, if Bitcoin dominance ends up flying up towards 70%, at that point, it would be very exciting to start watching for a rejection on the Bitcoin dominance. Because if Bitcoin actually ends up smashing resistance and going way higher, and then calms its titties and gives altcoin season the green light, I mean, things could get very exciting at that point. And honestly, guys, I know I'm seen as the bear and the early bear of the group, but understand, I would love to see that. I would love to get a crazy altcoin season. I was an early bull. I think that was kind of when I started streaming here. There was definitely some of my earlier streams where I started getting bullish, and actually I remember Max was also getting bullish, and we basically had the same idea when basically when FTX collapsed and everyone started saying for below 10k targets and stuff, and we were kind of looking at it that all of a sudden there was all this fear around so many exchanges, crypto.com, and I can't even remember, guys, basically so many exchanges. And, nothing ever came out of that. But what did happen was everybody started pulling all their crypto off exchanges at that point, because they were all scared we were going to have a Celsius or FTX or whatever. And at that point, I remember both of us were saying that it seems like there's got to be some sort of a supply shock. And then all of a sudden we started breaking out of structure on the weekly, and then it was bull market on. And so many people were saying this doesn't make sense fundamentally, blah, blah, blah. And it's like, yeah, but trade the charts, right? Because you were here back then, hey, Plumbus? That was like, that would be what, 3 years ago now? Something like that. Pretty sure I recall seeing you in a few of my early streams. It's been 84 years. Yeah, exactly. Yeah, that being said, guys, I mean, we're going to have to see, right? If Bitcoin ends up getting rejected and the Bitcoin dominance also gets rejected, then so be it. We'll just see what each individual altcoin is saying, basically. But if Bitcoin ends up smashing through resistance, new all-time highs, and then Bitcoin dominance climbs, and then it ends up getting rejected at that point, and those profits end up filtering or cycling from Bitcoin to, altcoins and meme coins and micro caps and all that sort of stuff, that's where you start to see those crazy altcoin runs going. So that being said, let's take a look at an altcoin. Hype. I know in the last stream, was that just last stream? Maybe this was one of my public ones, I think, last time I talked about Hype here. a couple days ago, I believe. But I had mentioned that, you know, it is possible that we did see a little bit of a change in structure here, right? We ended up losing this. Could even, if you really wanted to microanalyze, you could even say this one, because technically we did have this high, higher low. Again, I can't stress that enough, microanalyzing, but technically it was so well respected, right? Look at that SR flip, absolutely perfect. But either way, this is where we pivoted, right? So there is potential resistance once we get back up towards that $42.70 approximately, all the way up towards all-time highs and a little past for potential liquidity, up towards $48. But I do feel differently about hype. I know I've said this in my last few streams, you guys, is that Bitcoin's actually at macro resistance, right? Whereas hype is in price discovery, right? It's smashed through its initial pump, it dumped, whatever. No matter how you look at it, it broke all these resistance levels it formed on the way down, and it's in price discovery, right? So at this point, I feel better about something like this, and especially that, again, I actually feel a little better on altcoins right now, just because, again, Bitcoin is at resistance. A lot of altcoins are not. But that being said, when things spook the markets, when Bitcoin does take those quick tumbles, obviously those altcoins get hammered as well. It's just that when Bitcoin finds support, they're bouncing quite more aggressively, right? So I've still been any of the, well, I shouldn't say any, because like I said, I am in a little bit of this Bitcoin long. But most of the bullish trading that I've been doing for the last couple months, several months, has just been microcap memers and just spot trading because they're volatile enough. Other than that, mostly looking for those shorts on Bitcoin just in case there ends up being a really big reversal. ALGO Master. So the ALGO Master is actually still printing that slightly lower fib that I don't have anymore. I did mention this the other day, but ALGO Master printed the auto Stubers on that, and technically it hasn't been broken, right? It never did break above that high, so that's some nice additional confluence to have. Again, I prefer the bigger range, but it's nice to see that an indicator's agreeing that either way we're at resistance. That's what I take out of that. Let's extend that a little bit. Liquidations. What do we have for liquidations on the 4 hour here? Mostly to the downside. There is still a little liquidity above us, but most of it's starting to form below us. And notice that there's actually there is some right along my 214 fib target. Obviously doesn't have to get there, but does it make sense that we get there? Yeah, it still makes sense. It's still on the table. Let's put it that way. Liquidations banned. Now that is potential support for us. So that probably lines up with the Trendmaster quite beautifully there. So there is I got to give the credit to the bulls there, that there is a couple of indicators giving us those early warning signs. Volume delta, we're above the point of control there. Like I said, there's a few things looking not so bad on Bitcoin right now. It's just that we have to remember, for me, it's always structure first, indicators as confluence second. So we just have to remember to keep our heads on straight, because it's easy, and that goes for everybody. It's so easy to let your emotions get the best of you right now with what's going on. We're on pins and needles. We've been trading at resistance for how long? We haven't set a new higher high since early May. But realistically, I mean, I'm going to call it all the way back to January. Sure, we went slightly higher, but basically the top has been in since January. And that being said, since this is going to look very familiar to a lot of you, but since we have this high and this higher high, that puts our higher low right here if I was looking for a Stuber fib setup, right? There's been no additional structure anywhere else. That is the current fib pull for a bullish perspective. And this goes back to what I said at the beginning of the stream. This does not mean that we have to go down to these levels, right? But it does mean that it's possible that we go to those levels. And if we do, that's a very familiar bullish setup for me. And I will be looking to buy that rather than panicking like the rest of the market when we get towards support. Everyone will get very scared and everyone will start trying to short into support. And that's where, you know, we have the structure for a bullish setup here. Even if we get this quick dump down towards all the way towards 82, 78, hell, even what if we end up getting this liquidity grab here all the way down towards 69K? I mean, there is potential for a large move to the downside, and that doesn't even necessarily mean that we're bearish. That would just be on a bigger time frame, on a swing size scale, on, you know, more of a daily and weekly and even a 4-hour chart. That would just be a nice, healthy, very large swing, a very large range. You're ready for it? Yeah, honestly, me too. That's the thing. I won't be scared if that happens. I don't necessarily think that the bottom would have to be in there. I also want to be clear about that, because if my theories about the weekly chart are correct, we could actually have started, you know, technically be starting a bear market. And I don't want to say that confidently, because I have no idea. Obviously, it's way too early to say that it is, but there's the possibilities in a few of the indicators and a few things on the weekly and monthly time frames. And even if that ends up being the case, this is still just such an obvious buy level. And the funny thing is that we would see like 2 hours of green price action and you would see influencers celebrating the bottom's in, blah, blah, blah. That was it. Straight to $1 million, you know, all that sort of good stuff. You're going to see that after we get a slight bounce. They're going to get very vocal if we reach the 214 fib target, because that would basically be the opposite 786. It's like clockwork, guys. As soon as we get to resistance, that's where the big accounts start celebrating. And it's almost always right at a Stuber fib pocket. It's like a perfect bull trap territory. Literally saw it today. Right as we tested the 886, I saw someone claiming that we were going to $1 million this cycle and such. So just remember, guys, just try and keep your head on straight, because the chart always looks strongest at resistance and it always looks weakest at support. It does not mean those things won't break. They often do, obviously, otherwise we wouldn't have price action and structure. They do break, but they haven't broke until they've actually broken, right? XRP. All right. Yeah. Hype. I want to zoom in a little bit on hype. What do we have on lower time frames? I don't even know if this reached the Stuber fib, but we did have some structure. Very close. It's hard to say if I would have hit that one if I was swinging for it, because I always front run my fibs a little bit. But on the lower time frames, I mean, that's the current structure that I'm seeing. Just because, obviously, we had this high and this higher high. The lowest point between the two is here. And since that was broken, right, lower low, that means I can pull my fib from the pivotal point, basically. If at this point we end up breaking and setting a lower low, then that's one of those cases where, yeah, we could technically drop our fib to the lower low and end up seeing a lower high printed. However, if that gets broken, we would still have just a slightly bigger range again, right? Just like what I was talking about with Bitcoin on the 4-hour earlier. But so far, this is kind of what's in play. I wouldn't enter a position on this at this point, because obviously it's in the middle of something. Trendmaster, ooh, on the 5 minute, a couple lower sell signals, very slightly, but lower sell signals. That could be a nasty one if it's going to end up getting some sort of a steep correction. I mean, where did this swing start? And at that point, unfortunately, with this setup, this wouldn't actually be much of a Stuber fib. I mean, that's a risky one. Obviously, you have one because you broke this downtrend and then you're pulling your fib, chasing the price, get a pullback to there. Technically a Stuber fib. The part that I don't like is that we never did break higher than this. Just a perfect double or triple top, depending how you want to call it. Nasty. I want to see. There's that infamous divergence on the 1 hour. Obviously, I wasn't looking at this, but that's that overextended divergence, right? With a double top type of setup. Boom, double top test on the 5 minute, tested it basically perfectly. I mean, could have got such a tight stop. I would have left some wiggle room, obviously, but a little bit of rejection there when you zoom in. And like I said, that nasty divergence on the 1 hour. Oof. Unfortunately, that might go for a little bit of a tumble. Adrian, you caught that short on hype? On just below the 786 there? Nice. Yeah, you watch hype a lot closer than I do. I don't know why I don't watch it closer. You're aiming for hype to go to 37-ish? Yeah. So that would... Holy, I have way too much shit going on now. I'm going to remove these fibs just to clean things up a little bit. Let's just mark out my resistance. Let's mark out a few key levels here for hype. And you said about 37, and that is likely, yeah. So right near the bottom, somewhere in support of that smaller range there. Yeah, absolutely, right? I mean, that's where it would start to look like support again, anywhere in here, basically. Me personally, I'd probably look at the 1 minute or the 5 minute and try and find some sort of a bullish Stuber, some sort of a lower high broken, let's say 1 minute buy signals start trending higher on the Trendmaster, something like that. Or just laddering in and calling it a tight stop, I guess, either or. 32 for a bigger long. Yeah, and then you're talking probably something like this. That was the next support level I was going to start looking at. I assume that's kind of something what you were looking at. Boom. There we go. All colorful for us. There we go. Trader StuTube, in all your wisdom, boy, do I have you fooled. Have you ever come across any method to roughly gauge how far a divergence could play out? For example, we have measured moved with rising channels and head and shoulders similar. They are based on fibs retracements. What about the divergences? Is there any such strength-based measured move for a divergence? Basically, the way I see it is looking for a move towards the opposite Stuber fib, basically the opposite end of the range, at least. So in a case like this with the 1 hour, right, there's our divergence. So I would be looking at us basically playing out the majority of this range to the downside. But obviously, rather than looking at all the way towards support, I'd be starting to look at that 786. That's kind of what I aim for. But again, just like any trading I do, like if there's an early warning sign in any way, then I'll think about manually closing part of the position, half or a quarter or whatever. But yeah, I would expect to basically get a move back down to support of this range based off that signal. And that's why, on Bitcoin with this, basically this big divergence, right? And that's also a very specific RSI divergence, right? It's that overextended to 70, like overbought down to the 70 level, or oversold up to the 30 level on a bullish side of things. So that's an example with hype right here. For example, if all of a sudden we got the opposite one, right? If let's say the RSI does one of these, and I think you see where I'm going with this. But if we get something like this and the RSI hits this level and looks like we might be forming some sort of a support, especially if we are getting down towards the range support, I would definitely be looking at, taking profits and also, partial profits at least, and also considering opening a hedge. But we'll have to see how it plays out. Like me, I would probably, if I was trading this on the 1 hour, for example, I might zoom into like the 5 minute or the 15 minute or something like that. And if some sort of a microstructure lower high got broken, then I might consider closing part of my position to pay myself a little, downsize my risk, however you want to look at it. But yeah, ultimately, I think just with that divergence, it just shows once again, just like on the weekly, what I was talking about is we're approaching literally the exact same resistance level that we couldn't break when we had way more strength in the RSI. We have significantly less strength at the same resistance level. So why does it have to break through, right? That's kind of a way of explaining those divs. Oh, sorry, I just saw Torok requested to speak. Speak. I think I allowed it if you want to. If you're even still... Yeah, you're here. Yes, so I do use those divergences on the lower time frames as well. Like on the 1 minute, the 5 minute. Like I said, structure's kind of the same either way for me. So yeah, on the 1 minute, I like those as well. Again, obviously not going to play out every single time, but even something like this, right? Obviously this is cherry picking. It's just kind of the first one that I saw here. And where did we end up hitting that? Right about here. And even if we pulled a fib here, I don't, honestly, it may have broke the 115 a little bit. That's questionable. Usually I leave a little bit of wiggle room. I couldn't tell you if I would have got hit by that or not, but either way, that would have been a reason for me to be looking for a short, for example, that divergence. And yeah, it played out very quickly, obviously, but you can see how that, that double top with that specific divergence called a very quick, even though it was short-lived, it was a quick move. Kind of same thing with here, right? As we were trading along the top of this range up here. See the RSI go from overbought down towards that 70 level and ends up dropping. That's a tricky one because technically it did climb a little bit more. But again, it's just a warning sign, right? There's obviously we're losing strength. That's a messy one because it's not a super clean double top. Like typically when I see that that overbought down to the 70 level divergence, like that's a double top confluence indicator that I look for. And just to give you a few examples, because like right now, for example, this may not play out, right? The thing is, it has played out many times where let's say even right here we have a little bit of a double top, and notice that divergence, right? We went from overbought, test the same resistance level with significantly less strength, and then we dumped. So yeah, we eventually recovered that. Notice it was when that divergence ended up breaking. That's basically when we got our green light for a little pump there. But then we just end up printing a new bearish div off that level. And even now, if the RSI climbs a little bit, it's still not quite at that 70 level. So that's where I was saying that I want to see that climb above 70 before I get too bullish on this market. Just to show you some more examples, and I know that this is the weekly and you were asking for shorter time frames, but just to go back to showing how typically these like to play out the full range. When Chaos was asking about that. So here's another example, right? We have this double top here. Double top right as we end up retesting that 70 level, and we end up getting back to the bottom of the range. Actually a little bit further, right? This time we never really got one. We never had a clean double top or anything to go with that divergence drop. Obviously the one that ended the last market cycle, same thing, right? Approach the same level of resistance, significantly less strength, bear market on. COVID. Even before COVID, this thing, and I mean, call it for what it is. Who knows if this would have happened without COVID, but we got that divergence way back here, warning us several months in advance that there was a big shift in momentum there. So yeah, I don't know if that's what caused this or anything like that, but again, it's just one of those things. It hinted at a large drop, right? Even from here where we got that signal, it hinted at a large drop. So you see it quite often. And yeah, I like to use it as confluence on lower time frames as well. Ideally, I would like to see a new buy signal on the 1 minute for Bitcoin, followed by another lower sell signal. I'd probably add another short, to be honest. And I'd be updating my stop loss on this one because I'd have a new lower invalidation point at that point. Oh, Adrian, you're going on a trip. Have a great time. Safe travels. Yeah, RSI is baller, very useful. I totally agree. Like, don't get me wrong, I love some of these MDX ALGO indicators as well, but the RSI is the one like factory trading view indicator that I have used basically my entire trading life. That being said, that's why I have a very specific divergence that I use, because I back tested the shit out of that one. And that's why I like that very specific divergence, because it's probably the highest back tested strategy I've ever done. What happens when the divergence is to the upside in the RSI and the price is going down? Are you talking like a bottom reversal kind of a thing? Like, I personally, Like if the price is doing something like that, but the RSI is doing something like that, obviously that might be a little exaggerated, but I'm not as into those just because I personally haven't back tested it a whole bunch or at all. It's very specific divergences I look for, and it's basically double top with one of these or double bottom with one of these. Same thing, right? Just the opposite. And that's basically, it's actually, so it's usually like, depending how the candles form down here, but basically from the candle body to wherever the wick ends up, that's kind of the box that I'll choose for a lower high or a double bottom territory kind of a thing. Just like on the top, depending how the wick forms, something like that. But I will still usually pull a fib, something like that, because it may start the double top or the double bottom at the 786 or the 886, and it might run to the 115 for a bit of a swing fail, you know, but basically some sort of a double top formation or double bottom formation. And it's that very specific divergence that I look for. That's basically the extent of how I use the RSI for the most part. That's mostly what I'm looking for. Not to say it can't be used for other things. Absolutely, there's probably a million different strategies out there involving the RSI. That's just the very specifically how I use it. What settings do I have in my Trendmaster? You love the, oh, hey, come on. Why won't the settings open? Let's reload this. Something's going on here. Probably because I haven't updated my indicators in months. Trendmaster, indicator presets, I have my own, right? So StuTube, and that will automatically make your Trendmaster look just like me. I would actually prefer to get rid of some of this other stuff, these W's, these P's, the bears and the bulls. I would like just the buy and sell signals, but this is how the preset is set. So there's just a little extra clutter on there is all. But yeah, that's the settings. It's a preset. Let's get that bad boy back up there. And let's get the trend dynamic back up there, because God, I just love how that looks. I literally only use this indicator for the colors. That's it. It just looks so good. Yeah, Chaos, that's a good, easy little layout there. Oh, I wanted to take a look at Ethereum as well. Actually, before I do that, I'm just curious what the Dixie's doing. Still plummeting. And I know a lot of people say that that has to be an inverse correlation with Bitcoin. Sometimes they move the same direction. They don't have to, but usually I would say they're kind of inverse correlated, but not always. And some people get confused and think that it's always. What is ETH? up to these days. I clearly had an uptrend line drawn at some point that ended up breaking. So this is one thing I was talking about before, you guys. The fact that Bitcoin is at macro resistance and a lot of altcoins aren't. And Ethereum is no different. And it's not that... It's one of those things where it's not that we have to go up to these levels. But if we go up there, that's where I would start to be cautious again. Whereas that's probably where, you know, you're going to see the bullish echo chambers saying that we're going so much effing higher and blah, blah, blah. ETH to 10,000 and all that sort of ridiculousness. But they're going to start celebrating that right as we end up hitting resistance. It's very common. And that's not to say we can't blast through, right? It absolutely can. It can go parabolic. But the thing is to remember, just be careful when we start getting to resistance. If you're wondering where to take profits because you just don't know, I mean, obviously it's totally up to you. But when I start hitting resistance levels, that's where I start downsizing my risk and looking at any reason why I should start taking profits or looking for shorts or whatever, right? Depending how you're feeling and which direction you're looking at trading. But either way, that's where I would start to be careful because it would start to become a bit of a sell area. And that would be around 35.20, 35.30 even, up to 38.05. And then above that, obviously, you have your swing fail level from like 41 to 4,500. And yeah, that's a huge move away from here. And that's exactly why I said earlier that, you know, a lot of altcoins are not at their macro resistance yet. They don't have to get there either, but they sure can. Anyways, legends, I think that's about all I wanted to go over this fine evening with you guys. So hopefully you guys found this stream useful. Also, for those of you who are watching this on my YouTube channel a little later, if you want access to the MDX ALGO indicators, there's a 10% discount link in the description down below. And with that, I'm out. Stay safe, my friends. Peace.